The biggest pension fund by assets under management just bought more AMC. Now, in this article, we'll go over how many assets this fund controls, how many shares of AMC they bought and they currently own, and how AMC stock has been a winner so far in 2023. Now, this is going to be a multi-part video because we'll cover this in this video, we'll cover the data behind AMC, but more importantly, I want to again highlight the forced loan recalls that I think we're about to see, as well as this rally in AMC stock that is currently underway that is likely to continue for a while. Hit the like button, subscribe to the channel, source your comments, questions, or concerns down below in the comment section. If you guys also want to come trade with me live in real time, link down below in the description of this video as well. So let's just dive straight into it with this right here. Big Pension exited First Republic stock, bought AMC and D.R. Horton. New Jersey's state pension fund sold out of a sinking bank stock before it went down another leg and made other changes in its portfolio. State of New Jersey Common Pension Fund D, the pension's largest fund by assets, exited a position in First Republic Bank, bought more shares of theater chain AMC Entertainment Holdings and home builder D.R. Horton, and slashed an investment in home furnishing retailer Wayfair in the first quarter. The fund disclosed the trades in a form it filed with the Securities and Exchange Commission. Now, we'll skip down here. This is where they talk about they sold First Republic. They sold 100 and some thousand shares of First Republic. But AMC is no stranger to volatility, they say, but it has been an overall winner this year. Shares gained 23% in the first quarter and another 9.8% in April. AMC is one of the most prominent meme stock shares that bullish investors talk up on discussion boards and social media. A mix of more conventional business metrics and moves have been lifting the stock higher as of late. A smaller loss than expected sent the stock higher when the company reported fourth quarter numbers in February. The company also announced a plan to charge more for better theater seats. Ahead of its first quarter report on May 5th, AMC is showing impressive box office sales. So again, earnings is something we'll talk about in the next video today, and I highly recommend you guys watch that video because it's clear. I mean, it's about to get very bullish for AMC stock. In my personal opinion, keep in mind, I'm not a financial advisor. You could lose all your money if you listen to one person on the internet, blah, blah, blah. You guys know the disclaimer. Do not invest based off of anything you hear in this video. It's not financial advice. Now, the fund bought 10,000 additional D.R. Horton shares in the first quarter to lift its investment to 190,000 shares. They also bought 45,000 more AMC shares to end the first quarter with 371,000 shares. That's very bullish. And they sold 20,000 Wayfair shares to end the first quarter with 50,000 shares. So the fact that, wait, let's get this right. So you're facing potentially 80, 85, 90% dilution here, but this pension fund just bought more shares. Either this reverse split is a good thing for AMC, and fundamentally, sure, it probably is. And I think either way, it gives us the MOS, because in the end, it would be bullish, right? AMC raises billions of dollars. You're going to squeeze the shorts right there, right? Or this is bullish, very bullish in the short term. And I don't think they're trying to trade AMC necessarily, but that would mean that they expect the price of the stock to continue to rally. After all, we don't have the next court date until June 29th or June 30th. Those are the indications we got from Morgan Zern. Well, probably going to be pretty bullish until then, I would imagine. That's why I would buy AMC if I was a employee pension retirement fund, right? Okay. I think that's a good sign. Now, let's talk about something that I also want to pay very, very, very close attention to. And this is over here on Ortex. It's this. The total amount that is sold short in AMC stock. That is important. Where is it? Right here. $727.51 million worth of short positions on AMC. And you're seeing this number going higher as AMC stock is also going higher. And the dollar amount sold short is just as important as the short interest percentage of free float itself. Because the higher this number is, the more money shorts are losing, number one. But number two, the size of these positions, the breadth of this short squeeze trade. If there's $2 billion sold short in AMC or $1 billion sold short in AMC, which should start with $1 billion because that's only like 30% away, then you're a lot more likely to get a short squeeze than where we were just a couple of days, like a week or two ago, at $500 million sold short in AMC stock. The higher this goes, the better it is. Now, I think just period, you're vulnerable for a short squeeze. Based 500 million or $1 billion, does it change a whole lot? Kind of. Does it mean you can't squeeze when it's lower? No, absolutely not. But it makes your potential rally a lot bigger. Now, estimated short interest of free float sitting at 26.24%. Free float currently out on loan about 36%. Shares out on loan 185 million. Days to cover at 5. Now this is also key as well. Days to cover in between 5 and 10 is what you really want to see to give you a short squeeze. And I was actually, right here, Google says the biggest factor in a short squeeze is the days to cover as well. They say if one stock has 2 days to cover and another has 20 days to cover, respectively, then stock B may be more vulnerable to a short squeeze target. I love how simple Google breaks it down. But that's important, right? Because days to cover with the utilization being at 100%, it makes for a very tricky situation when shorts try to cover on their short positions because there's not a lot of shares outstanding. And you could see that with 100% share utilization. And you also have a high dollar amount sold short, a high short interest of free float, and lower volume compared to an outstanding share count of about 533 million. 5 days to cover is substantial. And it was just around 6, so it does bounce around in this range, but it's remained high for a long time. But I will tell you, it's a lot better than what you've seen in 2021 and 2022, where the days to cover would be like 1 to 3, right? You're a lot higher now, and that's because the volume is a lot lower. So it's basically saying if volume comes into the stock, then you could rally a lot more here. If AMC normally gets 20 or 30 40 million shares trading hands on a good day, if you all of a sudden get 100 million shares or 120 million shares or 200 million shares, well, that's going to affect AMC's share price a lot more rather than if you normally get, call it 50 million shares that trade hands every day. It's all relative to the volume here. So I think that is also key. And if you really break down each individual data point here, like we kind of just did for a couple of them, it puts it into context just how bullish we currently are. Now, live short interest of free float, no surprise, it's at the highest levels that you have seen throughout this whole entire MOAS trade, and that is essentially for this arbitrage trade. Now, this arbitrage trade is far from a home run, and I think you will continue to see hedging happening heading into the next court date, right? And that's going to be June 29th. Now, I'm sure we'll get some kind of news before then, so you want to really be on lookout for any bit of random news. But think about it like this. I think it's highly unlikely that this Mastery comes back and says that apes overall are in agreement with this settlement. I don't see that being the case. And I think Morgan Stern's going to take the recommendation of the Mastery, right? Because she's the one looking, giving you a recommendation after looking through all of these letters that have been sent, right? So I think at the very minimum, it makes sense to me that you get, number one, a vote of common stock only. I think that is almost certainly going to happen. Or you get a much bigger settlement payout. And that's, that wouldn't offset dilution, but it might be bullish in and of its own way. So from my perspective here, any news we get before June 27th is going to be good news for AMC going higher, right? Bad news for this reverse split. There's just, I would be very, very shocked if we got news that sent AMC stock down, 20% in a day or 10% in a day based off the courts before June 29th. It's not going to happen. So due to these cost to borrow rates being 350% for the cost to borrow max, cost to borrow average around 200%, and the trailing 3-month average around 250%, shorts are losing their asses on these cost to borrow fees. So if there's not really any bearish catalyst from now until June 29th, maybe earnings, but I doubt it, we'll talk about that in the next video, then you have to hedge out your position. You have to. Just the cost to borrow fees alone are making this trade unprofitable for short. So every single day we keep going, you're getting closer and closer to that short squeeze. Now, option activity that you've seen on Friday, 59 orders totaling about $31.5 million, positive order value of 3%. Not so pretty at all. But, let's face it here, it hasn't been pretty for a while. Really, unless you get those big bullish days, those big gainers, you're not seeing bullish option activity. You're seeing very bearish option activity, and that's something that personally makes me more bullish when hedge funds can't see through the noise. They can't understand a video like this, or maybe they just don't watch videos like this to see what's really going on and what are the bullish factors that are really at play here. Because I think if a hedge fund watched one of these videos, they would cover on their short position immediately. And I think that's a good way to look at it. But they obviously don't. So there is that. Now, with this forced loan recall situation, I think this is going to get dramatically worse over this next week. Now, you might not see all of this happen in the next week. It might take a while. Sometimes it can. But if you guys did not watch the video yesterday, then you have no idea what I'm talking about, a forced loan recall. So I'll give you a brief summary, but I highly recommend you guys watch that video. So forced loan recalls, they happen a lot during financial stress. This is one big reason why stocks like Volkswagen or some of the best short squeezes in history happened when the markets were not doing so well, right? When there was a lot of stress in the system. And that is because I explained in yesterday's video, credit card lines, home loans, auto loans with people like you and me. Banks can't just take their money back out of those kind of things, right? They can't just call you up and say, yeah, you got to sell your house, bro. No, they can't do that. They can't ask you to sell your car. They're not going to revoke your credit card. It would have to get very bad to limit a credit card. That'd be terrible, right? We've never really seen that before, unless the bank goes under. Now, where can they pull money out? Well, that's going to be money markets. That's going to be stocks. That's going to be hedge funds with liquid loans. And those terms that hedge funds get, it's all disclosed in there. Usually, it's up to a 3-day notice. It could be a 7-day notice. Could be a 10-day notice for that matter. But banks want to shore up their balance sheets. And when they have billions and billions of dollars out in loans to these hedge funds, they are going to pull some of that money back very, very shortly. Now, why are they going to pull that money back? Well, another one bites the dust, guys. First Republic Bank is going to go into receivership. They have way too much debt that no company is going to buy them out without the government backing it up. And that would be the government backing up tens of billions of dollars in losses. And that would be very unpopular. That would be a bad narrative to set for everyone else. That, hey, you could just go into all these risky practices. You can make bad loans. You could go throw it on red or black at the casino. And if you go under, we'll just bail you out. So you're not going to get a government bailout, right? And the banks just deposited $30 billion into First Republic about a month ago. And it's all going essentially to zero, right? So that's what's really going to trigger banks recalling a lot of these loans. And they're going to recall loans on some of the riskiest names. But keep in mind, we have not gotten official news that First Republic has went bankrupt yet, or went into receivership is the technical term, but that's probably going to happen over this weekend and by Sunday at the very minimum, because nobody else is going to buy this bank. It's just not going to happen. So that's what I have for you guys here in this video. Hit that like button, subscribe to the channel, source your comments, questions, or concerns down below in the comment section. Thank you guys for watching, and I will see you in the next one.